This is the Debunking Economics Podcast with Steve Keen and Phil Dobbie.
The Archives.
Episode 122. Will China survive the trade war?
Welcome to the Debunking Economics Podcast with Professor Steve Keen. I'm Phil Dobbie. Well, as you know, there's a trade war on right now between the US and China. And if you look at the US economy, you'd be forgiven for thinking they're the ones that are winning. Except the trade deficit isn't narrowing any. So as Donald Trump turns the screws even more, can the Chinese economy survive? Or are tough times ahead? That's today on the Debunking Economics Podcast. Well, since Donald Trump started introducing tariffs on China, starting with steel and aluminium, but spreading more and more to other things, the Chinese currency has fallen over 12% against the US dollar. The US dollar, meanwhile, has been careering to multi-year highs. The Chinese renminbi fleetingly hitting lows that it saw in 2006, but only very briefly. By and large, it's always been a lot higher than it is now. So, Steve, first of all, this will be very upsetting for Donald Trump, of course, because a low Chinese yuan makes their exports cheaper, 12% cheaper, it would seem, which means a 10% tariff on imports is going to be largely ineffective.
Absolutely. And this is one of the hassles about when you're trying to manipulate something other than a real estate bubble in your hometown. There's plenty of feedbacks that exist in this complex world he's finding himself in now that didn't exist in New York. And they can undo his plans.
But it's not good for China, is it, really? I mean, apart from the fact, okay, yes, they can export stuff. He'll just put the tariffs up even more. And we are going to see it raised to almost certainly 25% from next year. But China doesn't want a low one either because, I mean, they've got lots of companies that have got debt in US dollars. So, yuan is pushing up their servicing costs, which I think is why we're seeing the stock exchange, the Shanghai Composite, which has really plummeted this year, 23% down. So, I mean, that's a bad side effect for them.
Oh, yeah, there's plenty of good and bad side effects overall. But I mean, China, this, to some extent, what's happening now is a sign of China's success in the last 25 years, because who would have can you imagine the thought of somebody declaring they're going to put tariffs up on China in 1990? I mean, forget it. Yeah. It wasn't even an economy worth discussing in terms of the scale of it.
It's a sign of their success, isn't it? That's for sure. But absolutely. I mean, but they're not, but they're doing it all with their own money now because the stock exchange has started to tank. I mean, foreign investors are bailing out. It's largely local money. That's not going to be too healthy, is it?
Well, that's actually the standard thing. What they've successfully done is harness. They've done two things. They've very successfully harnessed foreign money when it came to building the free trade zones and to bringing in foreign machinery and foreign technology, so they had decent products to export rather than the crap they were making before the end of Madame Mao and her friends, and Mao himself for that matter. So they did very well out of that, but they've also pretty much just harnessed the local capacity to create money. So it's a combination of the two. And I think to some extent, if you're pulling out the capacity to bring in foreign money, buying foreign machinery, which is the main reason you'd actually want to bring foreign money in the first place, then China's dependence upon that has dropped dramatically. I mean, they need some agricultural exports. I haven't actually checked that. I might take a look while we talk and look at what China's imports are. But fundamentally,
well, obviously, iron ore is a big chunk as well. They need raw materials. Which is why Australia's been doing so well out of them. Yeah,
but there's also the fact that the machinery imports are extremely important for them when they first started operating because they literally. The local technology was just garbage. I mean, I'm speaking from having seen it, because I went to China in 1981-82 and was taken on a tour of a range of different factories to see what China was producing at the time. They were attempting to do a bit of a sell job for the transition that Deng Xiaoping was trying to push through, but it was absolutely juvenile. If I have a look at the factories, for example, we're taken to factories making light bulbs, and I can't remember if there was actually hand wiring going on, but it wasn't far from that.
Right.
Now it's incredibly sophisticated, and
I guess, they're bringing in those foreign machines. They only need to get them once. And this, of course, is where Donald Trump again gets upset. They only need to get them once to be able to copy them and produce them themselves.
Now, I'm looking at the brilliant resource. I recommend everybody to take a look at the Atlas of Economic Complexity put out by data scientists in Harvard University, not the economists, I might emphasize. And if you look at the China's imports, guess what its biggest import was?
What year were we talking about? Sorry, back in
2016.
Its biggest import. It's not not iron ore.
No, travel. In other words, and then when you classify travel and tourism as an import, what it means is your Chinese tourists are going overseas. So that's 13% of China's imports. And then you get electronic circuits making up about 10%, which you could expect because they can't yet manufacture, and it looks like they won't be able to manufacture for some substantial time, truly advanced ICs.
But that is a sign of an economy doing well, where tourism, people traveling overseas is your biggest import. They've got that disposable income to be able to do that.
Yeah, and let's go back to 1995, which is the earliest of which they have data to see what they're importing back then. Okay. And no sign of tourism, transport, ICT, with the biggest thing. You had basically machinery, huge imports of machinery, like machinery not otherwise classified as 1.5% of their imports. Parts for office machines, 1.25%. Machinery for working rubber and plastics, 0.75. Computers, 0.73. Then a whole mass of others. It looks like it adds up to about 15-20% of their imports.
But that was then, and
that was then.
Now,
this is now. Yeah. This is now. But you look at now. They're really what they're importing. Fundamentally, apart from the tourism side of things, they're importing what they need to make devices they export to the rest of the world.
But they're doing that with debt. So we've got Chinese debt of 36 trillion yuan, which is about $5 trillion, I think. And then we've got another 40 billion yuan in local government debt as well, as far as we can tell.
Yeah. I'm presuming a trillion there.
Yeah, a bit of trillion, sorry. That's right. Yeah. I mean, they keep on issuing this debt. More bonds are issued. I mean, maybe they are bought by the People's Bank of China, so there's more yuan in circulation. But that would be contributing to the devaluation of the yuan, wouldn't it, as well? If there's so much money, and is that part of the problem, that they are funding so much of this through their own government and just pumping more money to stimulate the economy?
Well, there's got a combination.
Massive QE, in other words.
Yeah, but the thing is, QE, when you direct it at the actual physical economy, can mobilize that economy, and that's what we're seeing at the moment. I mean, this comes down to how has China been effective? What have been the main factors? And without a doubt, a huge factor was importing foreign technology back in the early days of the industrialization process. But what made that more successful than just importing this stuff is it was done deliberately with the intention of learning how to make the same stuff themselves over time. So they got their massive technology transfer. And they also required American companies that took advantage of the incredibly cheap wages that applied back then. They had to have a Chinese partner, and within 5 years, the Chinese partner had to own half the business. So they've created their own industrial class as well. And that means that the skill set they managed to import by bringing in the machinery and training the workers up on the machinery now means that they also have the factories and the technological and institutional capability to make this stuff themselves. And I'll just actually give another bit of a quick summary of that thing about imports of China over time versus what they are now. In 1995, when you look at the one-digit level, 19% of their imports were machinery. You come forward to 2016, 12%. It's fallen a bit. But now the most important by far is electronics, which means they're importing all the components for making computers, 20%. Services, 23%. That's where tourism turns up. Minerals, which I would have thought would be larger too, is 13%. And you add in vegetables, foodstuffs and so on, that it brings up to about 20% in raw materials. So it's been a huge transformation in their capacity to produce this stuff. Right. So when you start putting
but are they producing this stuff for export markets? Because then that raises the question. So it's looking more likely than not that we will get to the end of this year Donald Trump will get jack of it and will say, yep, we are going to push ahead. And the threat is 25% tariff on everything that comes out of China. And then he's going to get annoyed about anybody who tries to subvert that by sort of dealing with China and then passing on. He's going to try and stamp that out as well. This man has got a mindset that he's got to stop this balance of trade deficit with China, which is a big, it's a big ask. He's going to do what he has to. And so far, the US dollar is booming on this. The Chinese yuan is down. And more to the point, as I said, the stock market in China is nosediving, 23% down this year.
Yeah, I think it's serious challenges for China, but I think, as it's been saying in the conversation, a lot of this is backfiring on America as well. And if you look at like the electronics, let's look at their exports for a moment at the same level of detail. I mentioned their imports were 20% electronics, their exports were 26% electronics. In other words, they're taking in the stuff and re-exporting, and of course their export volumes are far bigger than their import volumes. So in 2016, their export volumes were 2.5 trillion. Their imports were 1.9 trillion. So the percentages are even more exaggerated. That's their trade surplus coming
But I'm
out
sure Donald Trump would look at that, for example, and say, yeah, well, a lot of this component manufacturing in electronics can be automated. It can be, let's just provide grants for people to set up those factories in the United States, and let's just take that business away from China.
Well, that's partly, again, that's partly of a modern trend when you have the increase in 3D printing and machine-controlled systems, computer, robots and so on. But the thing is, to actually manage that, you've got to have a skilled workforce in the very first instance to install the stuff. And that's where America, by having done this, effectively pact with the Chinese devil, reversing the old white. I was once called a white devil, by the way, which is a very, very funny experience in a Chinese theatre in Sydney, when my companion spoke fluent Chinese. I'll tell you the story later. But anyway, so the Chinese devil, the pact they've made meant that they got dramatically lower wage costs. This is the American capitalists. They did very nicely out of sacking American workers and hiring Chinese ones instead. Huge advantage in those days. Yeah. But what that meant was the Chinese workers got skilled up over time. And again, that come back to the comment I think from Scully. Apple, was it Apple's boss called Scully? I keep on forgetting who runs the company. But he said that if he held a meeting of machine tool experts in America, he could hold it in a boardroom. If he held the same meeting in China, he'd need a stadium. And that's part of the problem. If you're going to do this thing,
pay them well. Pay them well to come over from China into America. And it's largely automated these days. You don't need as many people. Presumably, that's Chinese advantage.
You don't, but you still need people and actually know how to put the machines together, and how to actually build the factory to, there's a lot of, yes, once you get the machines running properly, then it's very, very smooth. But before you do that, you need a hell of a lot of skilled labor. And this is actually, Elon Musk has discovered this the hard way by trying to over-automate his factories for Tesla. He's now realized he went too far in that direction. He should have relied more upon labor, skilled labor in the early stages. Now, the thing is, China can do that on a scale America cannot. So Trump might think that might be the way around it and bring back with the mechanization and so on. It's a lot harder to do that than it is to already have that industrial base and be able to build on it.
And how important is the value of the yuan in all of this? And, and how far is it being controlled? I mean, it's controlled to the extent that the authorities say, well, it can only move within a very limited band, on a per day basis, a 2% band, basically. So they can say, it moves freely, but with constraints, which seems like a sensible policy to me. Are they doing more than that? Because certainly that's the belief, isn't it, by the Trump administration, that they are currency manipulators.
Well, they are in one fundamental sense, and that is that they're not letting the money created by the exports of Chinese companies to the rest of the world to end up in the Chinese monetary system as much as it would if they weren't sterilizing it by buying American bonds. Yeah. So what you get is the Chinese corporations export to America, earn American dollars in return, tender the American dollars to the central bank, get Chinese yuan back in their accounts. But rather than the money which turns up in the Chinese, the American dollars are then used to buy American bonds, which comes back and means you've got a demand for American dollars as well as a supply of American dollars, and therefore the American it doesn't change all that much. It doesn't change the relativity between itself and the yuan.
Right. So give that to me again. So so you're doing business in America, you get paid in American dollars, and rather than repatriating that back to China, you're using it to buy bonds in America, almost as a form of hedging. So that
what it means is you're not going to see the American dollar falling as much as it would. Therefore, therefore the yuan rising. So
they're manipulating the US currency more than manipulating their own, in a way.
Fundamentally. And that's what people worried about China being able to sell other bonds and flatten the American economy. Not a problem, because the American government has this thing that produces American dollars called the Federal Reserve. Yeah. So there's no problem for them in America being able to absorb its own bonds. But a large part of what China's been doing is sterilizing the impact this would have on the yuan American relativity.
Well, they can't anyway. I mean, if they started selling those bonds, then those bonds would start, the American dollar would start to dive. The bonds would lose value before they sold them. So, they'd be buying them for less and less, unless they can simultaneously buy everything in 1 second, which you can't do. So,
no, the same sort of band control that applies at the Federal Reserve. They want to keep the interest rate in a controlled band, and they'd be buying those bonds to avoid, if China was selling, it'd be the Federal Reserve buying. So, there's no easy capacity for the Chinese to hit the American interest rates.
Right.
But they have avoided the export sales driving up the yuan as much as it would have done if they weren't trying to sterilize it at the same time.
But of course, this argument anyway about manipulating the currency, if they are, they're very bad at it, because they want the yuan higher than it is, not lower, really, don't they? Because as we've been saying before, there's for companies that have got foreign investment, or foreign debt, I should say, they don't want those debt costs to rise. So they want the yuan to stay
How much,
up.
do you have any, I don't actually have figures on that, how much from China's private debt is denominated in US dollars?
Well, it's in the share market. That's been the main reason it's dived, because foreign investors have been getting out. That's why we've seen this 23% fall in the Shanghai composite. The one reason given to it is foreign investors buying out. It's almost now entirely domestic investors in the Shanghai composite.
Let's call them domestic placement speculators, because they're not actually investing unless they're actually using the money.
Okay, but you know what I mean. Yeah,
I don't think it's quite possible the Chinese authorities would be very happy to see that fall on the Shanghai index, because they're rather more skeptical about speculators than the Americans are.
So just aside from that, so the currency is what it is, and we'll see how it plays out in terms of, this game that's being played, in terms of trying to reduce that balance of trade deficit, which of course is an impossible task. It's too large anyway to see anything.
It's gigantic, yeah. And again, it's been an incredible success of the Chinese to maintain that trade surplus over time and industrialize their economy using it. If you've been to China in recent years, if you've never been there before, and you went recently, you wouldn't necessarily see the change. I'm still gobsmacked by the contrast between the banks of the Bund River in Shanghai when I went there in 1981-82, and I could literally see on the other side there were just rice fields. I think it's the southern side of the Bund. You go back now and there's just skyscrapers.
Yeah.
And the level of technology, the standard of living is supposed to be, lower than America. Overall, in most parts of China I went to, which are mainly made, of course, the major urban centres, into the countryside in recent trips. But you see a very comfortable standard of living, thanks very much, fairly widely, certainly more widely than enjoyed in America.
So why is all this growth sustainable? Because a lot of it is government money, which is funding this. That can't go on forever. I guess it can go on.
Yes, it can, mate. This is the story. This is where modern monetary theory makes sense, because if you're creating your own currency and it's accepted for payments inside your own realm of influence, which is normally a nation state, stronger nation states, again, like China, America, projected even further, you've got an indefinite capacity to create that, because nobody's ever going to reject getting yuan put into their bank account in China if the government wants to buy something. So that it's not the government debt that's limited, it's the private debt that's limited. And that's where I think that gets more interesting. But the public debt, what they're showing is the effectiveness of following a theory informed by modern monetary theory, probably a monetary policy informed by knowledge of the capacity of the state to finance its own spending. And of course, because you're coming out of a communist past, that's not a novel thing for the Chinese. They stuffed it up under Mao, of course, because with a centrally planned system, it's almost always going to fail. But, and again, particularly even how heavy-handed the Chinese were. But when you're living in a market economy, and when you've got that same state capacity to create money, it suddenly works because you're getting the innovation in a capitalist system as well, plus the state providing the monetary facilities for doing that. But it's when you start relying upon private debt, you're likely to have problems. And that's what's happening in China at the moment.
And what about local government debt as well? Because they haven't got that same ability as the central government to go to the People's Bank and say, hey, look, buy these bonds off us. Presumably their debt's going to be a bit like private debt as well, isn't it? Yeah,
that's an interesting curling in China, because one thing I was wondering is how are the real estate speculators, and there's masses of construction, as we all know, in China, where are they getting their funding from? And it turned out a lot of it was coming from local government. Now, what was going on was local government also provides a large part of the GDP, and this is another thing which makes it a very it's not your standard capitalist economy. So the local councils in some cases are as powerful as states would be in America, and they will sell land on the periphery of their cities to property speculators. And I've seen this in a town called Dayang in China, which has got a population of about 1.5 million people, a satellite suburb of I think not Shenzhen, it's I've forgotten the name of the capital, but anyway, capital of Sichuan. So a satellite, what they call a third or fourth tier Chinese city. And my then partner had bought herself a place in a 25-story building with about 20 of these buildings in one area. And then I was looking at all the industry occurring as well in the country, and it's looking at this councils, where is this all coming from? It turns out that councils will sell land to the property developers. Okay, the revenue from selling the land to the property developers is then used to establish industries run by the local government, which are counted as part of GDP in terms of their output, bugger whether anybody actually buys it or not. So a lot of the GDP figures are rather rubbery because they actually involve these. Well, it's also very short term because you're going to, I mean, it really is a build it and they'll come mentality, and it's kicked off by land that you can only sell once. You're going to get that money from selling the land that one time. But again, because of I saw some interesting little videos, and it's just put up on YouTube recently, people talking about the scale of the building that's gone on. If you're building 25 and 30-story towers, you can house a lot of people in the existing land on the periphery of the original town. So there's an enormous capacity to absorb that. But do they have jobs? I mean, do they, because this is the question, isn't it? The economy is growing, but is it growing efficiently? Now, we know the unemployment is extremely low. It is, in fact, 4.09%. It has been 4.09% for the last 10 years. We know that because the Chinese government tells us. That is, talk about rubbery figure. That's my favorite false statistic on the planet. 4.09. I mean, I love the precision. 4.09%. And it's been at that rate for about a decade. But what is actually happening is much more complicated than that. It's very, very hard to work out what the scale of production is in China and how much is sustainable in the long term. But we do hear these stories, don't we, about housing projects lying empty, probably the same with shopping centres, factories producing too much. I mean, the dumping of steel was a prime example of that. So, I mean, it's not efficient growth that we're seeing in China. It's maybe just any growth is good growth, but it's not efficient growth. No, I don't know whether I think efficient growth might be an oxymoron. But certainly when you look at the quality of what's being done in various cases, not so much in the urban stuff. I mean, I've got photographs of the rather shoddy plastering work on this building my ex-partner had, and unfinished properties. I mean, the property, were about 25-story towers in this particular complex. And there were, I think I counted about 15 workers doing the gardens. which I'm talking working from raw clay. They were building the garden. So it was going to take 15 workers would take a decade to finish the job they'd set themselves out for. So there's definitely the fantasy stuff does exist there. At the same time, when you look at the infrastructure they're building for high-speed rail across the country, it's stunning. And far higher quality than anything that exists in America. So it's a mixed story on this front. Yes, okay, you can say some of it's inefficient, but at the same time, given the engineering focus that still dominates how the Chinese leaders think, and most of the Communist Party higher ups and the ones who want to become higher ups come from an engineering background rather than an economics or law background. Then when it comes to planning something, they've got that engineer's attitude, and they'll do a far better job of it than lawyer-dominated America.
So, I mean, the saving grace then, I mean, it's often been said, over recent weeks and recent months that China's digging its heels in, ready for this trade war. And they've got a big domestic economy. So if America stops buying Chinese stuff, it trickles to a halt. They've still got their domestic economy, which they want to grow, which is basically, close to 1 in 5. I think it's about 17% of the population. So let's call it 1 in 5 people live in China. So there's this huge domestic market. So a big opportunity there. But if there's a lot of stuff being produced, but it's not being produced efficiently, so people aren't earning enough to be able to afford to buy it, and they've got the debts from buying these houses and whatnot, so the household debt's rising too, then you've got a problem, haven't you?
You certainly haven't got a solution. There's elements of that are a mess to it, but I think the capacity, harnessing the state's capacity to produce new resources using its capacity to create money domestically, and not being worried about the level of private, not believing got everything over to the financial sector, not seeing the financial sector as a servant rather than a master in China. They're more likely to be able to look at some debt problems that originate and say we're going to eliminate them. We're going to write the debt off and keep the company operating by giving an equity injection. That's a feasible option for China. It is, I'm never going to try to pick China because that huge mess of both a centrally planned with a capitalist economy at the same time, makes it a very, very different kettle of fish. But to put some numbers on that, the private debt side of things, if you look at the level of private debt in America versus China, throughout the period from the beginning of the open door policies and the early 1980s, the gap between the two was about 50-60% of GDP. That was sustained right out until the global financial crisis hit, when America's private debt level peaked at 170%, when China's running about 110. So a 60% of GDP difference between the two countries. You now fast forward to today, and China is now got a level of private debt 60% higher than America's.
Yeah.
Okay, so it's gone. America's down 150%. China's 210%.
So the economy slows because there's a less demand for exports. That's a real concern, isn't it?
And they pumped up the demand. Well, they pumped up with credit. So yes, it is an issue, and they are seeing decline. I mean, again, to put the scale of what that meant in terms of actual amounts of money being created to drive economic activity in China. When America went from credit being 15% of GDP before the crisis to -6% in the middle of it, China went from 20% when the crisis hit, down a bit, up to 38% of GDP. So they're massively dependent upon credit demand. Now they're going to be dependent upon export demand, but not to America. And I think a large part of what's happening here, and this is again is one of the side effects that Donald Trump here in this case is his own side effect. Because he's been so disruptive on every possible front, the Europeans are thinking we have to reorient ourselves, and quite literally they may orient themselves as a result and say let's build better economic and industrial links with China to get a countervailing factor against this rogue state called America.
Yeah, and it is becoming a rogue state, isn't it? So do you think there's a chance then, given all of that, I mean, it sounds like you think China is pretty resilient, even with that high level of private debt. And I guess it does have growth on its side in that, there's a growing number of people moving into those apartments, moving out of poverty, moving into the middle class. And we are talking about so many people. You've got that potential, for the economy to grow in total, come what may. And that's going to take decades, really, before, you start to see that sort of number has leveled out and everybody is at within a equitable range of income. So you've got a long time of growth before we get to that.
Yeah, and the other thing which is happening in China, and again, last time I was back in China, I think it was 2016, maybe 2017, and the previous time to that, I went through in 2013, I think, and the change in the level of pollution between 2013 and 2016 was fairly remarkable. When I arrived at the second time, my second recent trip to China was to go and give talks at the what's called the École, the same as the French École Normale. It's China's normal university, which tends to train the bureaucrats. And the pollution levels were so bad that my friends greeted me and said, "Look, it's blue. It's an APEC blue sky." What do you mean by APEC? When they had the APEC meeting, when everything, all the industries turned off, they literally shut all the factories down so the air was clear. And this was one day and only one day when I was in China on that trip. The sky was blue, so they call it APEC blue. But you fast forward now, and again, I was saying about 1 or 2 years ago, and it was also a remarkable, noticeable drop in the pollution level. So again, because they have a command economy approach, they know they've got to reduce the level of coal pollution. Because you can smell the coal in the air. You certainly could in 2013 in Beijing. Now they seem to be, they're still building a lot of coal-fired power stations. They're not decommissioning them like they were going to do, but they are building an enormous amount of renewable power. And that sort of command economy approach means they can do it. Whereas in America, you're going to rely upon the market to get you there. And at the same time, the state is actually stuffing that up, as we all know, trying to destroy the move towards renewable energy. So China's, on that front, overall, I'm a fan of what China has done. And even though I think they've got all the ingredients for a financial crisis with the level of credit dependence they have, it's the other sides of the economy, the export surplus, and the government funding capacity, realization that it has a capacity to fund domestic spending. Those factors, I think, weigh in its favor. So I can see it getting through. It'll have a credit crunch. It has to have one. But it will get through that credit crunch, I think, more effectively than any Western economy has done.
Right. And this could all happen quite quickly. I mean, because the catalyst for all of this, for that credit crunch, could be this tariff war next year.
Not so much a catalyst, but that can be a little flame you throw into the mix already. The catalyst is, the credit running out of steam. So if you look at the level of credit in China right now, again, as much as you can trust the figures, it has come down dramatically. It peaked at 38% of GDP in 2010. The most recent figures from the Bank of International Settlements say it's running at about 21% of GDP. Now that's still massive, but it's down substantially, and it's got a long way to go before it hits negative. But the Chinese debt levels, nonetheless, given because of the rate of growth of the economy, the debt level seems to be leveling off at about 210% of GDP. But that's far higher than America peaked at. But I believe that peak is more sustainable because if they're running a trade surplus, so they've got the trade surplus plus government spending is enough to cope with the level of private sector deleveraging that may occur. Right,
but if that trade surplus comes down because of the tariff war, then that's going to make it more uncomfortable for them.
It could do, but at the same time, as I said, Europeans are going to be very happy to, and because what that can imply again, and this is where, we really are in an incredibly messy stage of human history here, because this is, in some ways, what you're seeing is the rise of one empire and the decline of another. And part of that, part of the reason for the decline of the American empire is because they've insisted upon being the world's reserve currency and using all the muscle that gave them. And we should have gone with a non-national system, Keynes's Bancor and so on. Yeah. That was only going to be talked about. Nobody did ever do anything about it until Donald Trump comes along and shows what happens when somebody, throws that weight around. Now, if Trump actually comes along and says we're going to use the SWIFT system, for example, to penalize anybody who imports from China, of course he's done that for anybody importing from Iran, then we could see pressure from the Europeans and the Chinese, in particular, maybe also the Russians,
to set up
to bring about an alternative payment system.
Yeah. And that could all happen. Well, it's going to be an interesting year next year to see how all this goes, because it is looking very likely 25% on everything out of China. Donald Trump's almost certainly gearing up for that. So we'll see how the fireworks go. Good to talk, Steve. We'll catch you again very soon.
Okay, mate.
Well, next time, we're going to look at a UK Treasury Committee inquiry into household finances to try and find out whether we're saving adequately in the current economic environment. Well, the answer obviously is no. Why is that? Well, Steve submitted a fairly lengthy explanation of why that's not happening, which they chose to ignore. So we'll look at why, what his suggestions are, and what they suggested. Two very different things. Next time on the Debunking Economics podcast with Professor Steve Keen. I'm Phil Dobbie. Thanks for listening.